I'm starting to get messages again by people that are pretty far away from crypto. I just recently got a message from my brother saying he was so surprised we are now at 50K in Bitcoin. I got another message from a colleague, same thing. And to be honest, I am surprised that they are surprised. Like for me, it was always crystal clear that we're going to see 50K again. The only question is, are we going to see 100K or 200K, or where are we going to top out? But the whole idea that we couldn't reach 50K in Bitcoin anymore and that this would be a surprise, that surprised me. But it seems to be a thing for the people that are outsiders that don't really think about Bitcoin that much, because Bitcoin is really a different beast. What's driving the returns of Bitcoin? The first thing that drives every asset's return is monetary expansion, right? The M2 money supply, the US dollar money supply, expands on average around 6.5% every day. Every year, not every day, that would be terrible. Every year, right? So it goes up by 6.5% every year. Now, when you look at the historical stock market returns, they are not that much above that, right? They may be 8.5, maybe 9% per annum. So the majority of the return actually that you get with the stock market is simply monetary expansion. Same things for houses, for example, right? Houses even increase slower in price than stocks. So the reason why people get rich with houses is obviously because the debt that they have on the house also devalues by 6.5%. But that's a different story. So one of the drivers, of course, for Bitcoin is that monetary expansion. But it's obviously not the whole story, because why does it make 3x every cycle, every 4 years? That's way more than just 6.5% per annum. But that's the main thing, right? That's the first, just the monetary expansion. The second thing, and this is what most people don't really have on their radar, that aren't that close with Bitcoin. The second thing is that Bitcoin is entirely inelastic. So that's Econ 101, right? There are different goods, and the higher the demand for a good gets, the more the supply also tends to expand. Right? If you have gold, for example, and the gold price goes up, then there will be more gold mines, right? Then it becomes more profitable to mine gold. And so the supply of gold, even though not very quickly, will also go up after a while. The same is true for oil. The same could even be argued for stocks, for companies, right? When companies get valued super highly, then it's very profitable for venture capitalists to throw money at everything, because once they make the IPO, they will get multiple return investments, multiple X returns. There we've got it. They get tons of return when company valuations are high. Vice versa, right? When company valuations are pretty low, it's very hard to fund your startup, simply because the prospect of exiting isn't that attractive anymore. So even the number of companies, so to speak, expands as prices go up. There is a demand-supply relationship here as well. Bitcoin, I believe, is the only well-adopted asset, the only asset that's here to stay, that's not going to get banned tomorrow, that has 100% inelastic supply. That means as demand rises, the price goes up way more than typically for any other investment. And that's why we see those massive returns over time. That's, I think, is the main driver, actually. So you've got a lot of illiquid Bitcoin, right? Bitcoin is simply just stored away, it's stashed away. People don't really trade with it that much. And so they simply just save in Bitcoin. A lot of Bitcoin hasn't moved in the last 3, 4, 5 years. It's simply just another savings vehicle. And because of that illiquidity, the volatility of the Bitcoin price is also pretty high. So it doesn't need that much of Bitcoin's supply to actually get sold for the price to crash. For the price to go down by 70 or 80%, which can happen, which has happened several times in the past, that doesn't mean that 70 or 80% of the Bitcoin supply has to be sold. It's the opposite. It's maybe just 10, 15% of Bitcoin supply that's actually moving during those times. It's simply because it's so illiquid that just a bit of Bitcoin can have a huge impact on the price. Right? Compare this, for example, to properties. Let's say you've got a street with 100 houses and houses don't get bought and sold that often, right? Now you suddenly have maybe a crisis across a few families in that street, and 3, 4, 5 houses in that street have to be auctioned off and sold off way below to what the houses went for before, right? Suddenly, the comparables on that street also go down, and the valuation of all those 100 houses goes down. Everybody in the end feels poorer just because those few families had to sell their house. And the same effect with Bitcoin. Just because 10 or 15% of holders decide to sell, that already creates such a cascading effect that everybody feels poorer in the end. The price crashes, and that's when you have to buy. But why is Bitcoin then going up that much? There's the inelastic supply, and it's obviously the monetary expansion. But there's a third effect, and that's why the Bitcoin returns tend to decrease somewhat over those decades, right? That's why for every cycle we tend to get less of a return compared to the prior cycle. And that third effect is adoption. So there is a total addressable market for saving in Bitcoin, right? Everybody wants to retain their purchasing power. Most people do this by buying a house or by buying stocks. But now we've got a new thing in town called Bitcoin. Now Bitcoin might not be for everybody. Saving in Bitcoin might not be for everybody. And that's because you also have relatively high fees, right? To buy and sell, you might potentially have to pay either the centralized exchange some fees. Alternatively, if you do this over the counter, you still have to pay the gas fees. There are a few dollars involved, right? So if you only say save $10 every month, right? Say you're in a developing country, you only save $10 every month, then Bitcoin is not for you because the fees are likely too high. But if you are in a, say, second-tier country or in a developed country and you're saving way more than that, you're saving several $100s every month, then saving in Bitcoin is potentially for you, right? Then you're a potential part of the total addressable market. Now with the ETF launch, things became way better in terms of adoption. Now people that would never touch Bitcoin before suddenly are touching it. Because first of all, it becomes easier, right? Like the logistics of it become easier. You don't have to buy a hardware wallet anymore. You don't have to learn a bunch to buy it. That's number one. But number two is also there's regulation, right? So nowadays you can potentially think about putting Bitcoin in your 401k. You can suddenly officially save for retirement partially in Bitcoin. That was not possible before the ETF. Right? Nowadays, a fund manager could think about, maybe I do want to take this additional risk and put some Bitcoin in my fund. Because think about this actually. There is a conflict of interest for fund managers. There is a conflict of interest in the way that they are incentivized to take on more risk to get more returns because they participate in the upside, but not so much in the downside, right? If a fund outperforms whatever index they chose to compare themselves to, right? If a fund outperforms, say, the S&P 500, then parts of that outperformance goes as fees to the fund company or to the fund manager. Now, if you increase risk, if you simply just increase overall volatility and you don't even have a strong conviction in Bitcoin, if you simply just think, okay, Bitcoin is very volatile because it's very illiquid, I have no idea where it's going, it might go up, down, or in circles, I have no idea, but I know it's more volatile, it could go up, there's a chance that it could go up. Right? My thesis is not that the expected return of Bitcoin is 20-30%, right? I'm now talking in the way of the pessimist. I don't believe that the expected return is high, but I believe that the distribution of returns is way wider for Bitcoin than, say, for stocks where it's very narrow, right? Where you've got somewhat of predictable returns, comparatively speaking. If that's your thought behind Bitcoin, you might still be incentivized to buy Bitcoin simply because now the chance of getting this extra return increases. So the returns of a fund manager, to a degree, are a bit structured like a call option, right? So if you go above a certain threshold, you make extra nice money because you get some of the upside. If you go down, nothing is really lost, right? You might lose some trust, some reputation, etc. But you can open up another fund in another country, nobody notices basically, and you can restart again. And so that's probably one of the reasons why Bitcoin will also get more and more adoption through those ETFs in the traditional finance world. Not necessarily because the older generation believes in Bitcoin that much, but simply because it will get pushed to everyone through that very asymmetric returns. So I don't understand why people don't get it that Bitcoin can easily be above 50K and maybe go to 100K, maybe go to 200K. I don't believe so in this cycle, right? If you simply just look at the dynamics, at the historical dynamics when people tended to sell. But being surprised at the 50K was a surprise to me. I think it's totally rational that Bitcoin will, over the next 10, 20 years, outpace stock returns. Because stock returns net is maybe 2 to 3% if you remove that monetary expansion. On top of all of what I've just said, right? Asymmetric returns, right? Adoption by traditional finance. Then inelastic supply, that more demand will increase the price further than usual. On top of all of those things, you've got the additional thing that Bitcoin supply is actually shrinking. As in, there is the mining going on, right? We've got still the mining, 1.7% per annum in Bitcoin gets hit by, in the market. The miners sell 1.7% per annum roughly into the market. That gets cut in half now in this April. But actually, more Bitcoin than that gets already lost every year. If you look at the Bitcoin that hasn't moved in the last 10 years as a fraction of all of Bitcoin, that goes up by roughly 1.5 to 2% every year. So 1.5 to 2% of all of Bitcoin didn't move or continues to not get moved on a 10-year scale. So it might have been, I don't remember the exact number, right? It might have been 15% last year and 17%, then it might be 17% today, and then it might be 19% the year after. So more and more of the Bitcoin gets lost. So the mining isn't even a problem. We're already outpacing the mining with the lost Bitcoin. Now on top of that, we've got the ETF, where we also get roughly 3 times of the mined Bitcoin gets scooped up by the ETFs. So that also shrinks supply. And we've got all the other effects, right? That just a bit of demand overhang pushes up the price so much. So there's no question whatsoever that Bitcoin will outperform stocks, in my opinion. And that's why I believe it might actually be not such a bad idea to use Bitcoin partially for retirement. There was the idea of the 40-60 portfolio, right? 40% in bonds, 60% in stocks. Now nobody does this anymore because bonds are just so abysmal relative to monetary expansion. People just lose money in bonds. But people thought it might be a good idea for diversification. But if you want to diversify your stock portfolio, why not do this with Bitcoin? Why not have a 40-60 split Bitcoin to stocks if you already have paid off, say, your property? There's nothing against this, right? Because the longer you play this game, right? If you play this until retirement and you've got another 20 years until retirement, how high is the likelihood really that the Bitcoin that you buy today will be lower in US dollar terms 20 years from now? Today compared to 20 years from now, how likely is it really that you will have a Bitcoin that's lower at that point in time? I don't think that's super likely, right? The tokenomics are completely in favor of Bitcoin. There's 6.5% expansion every year, right? If you think about this over the long term, there is no way Bitcoin could lose unless it becomes completely illegal, right? Or unless some crazy hack happens. But those two things are unlikely. It's probably as likely as that the monetary system completely collapses and all of your stocks are gone. I guess the likelihoods are in a similar direction. So if you feel comfortable having 60% of your wealth, of your liquid wealth in stocks, then it shouldn't be that far off to have also massive money in Bitcoin. But again, Bitcoin is volatile and you want to buy it mainly when it crashes, simply for peace of mind, right? There's way more volatility percentage-wise in Bitcoin. But there's also another kind of misconception here. Because you could measure volatility or the downside risk in 2 ways. You could measure it from the top to the bottom, right? Like how much could I potentially lose, or how much have I lost historically in this asset? Or you could look at this in terms of how long does it take for a bear market to recover back to all-time highs? If you measure it in that way, in the second way, then actually Bitcoin is less risky, because historically it always took less than 4 years to reach old all-time highs. Even if you bought at the tippy top and you took the whole bear market, you waited for the recovery, it never took more than 4 years to get 100% recovered. With stocks, that's not the case. With stocks, despite the monetary expansion, etc., you might easily have to wait 10 years, 20 years. So what's really more risky? It depends, right? If you need the money potentially very quickly, then having this massive number, this volatility in numbers might be an issue. But if you're just saving for retirement, then the volatility isn't that big of an issue. Right? Then you're actually rather wondering, could I recover from a crash? Does it take too long? And for Bitcoin, that's actually less risky than for stocks. So a lot of thoughts here, right? It was a bit of a scattered video. It wasn't 100% scripted out, but I hope still that you learned something here. If you did, please give this a like. And if it's your first time here, feel free to subscribe as well. I publish videos regularly. See you next time. Cheers.